want to show you a trade I made with Netflix on March 27 that allowed me to make a return of 16% in 2 weeks and a half. So I placed the trade on March 27 and the trade closed April 12. So the trade I made was an option trade called an Iron Condor on Netflix, as you can see, expiring April 12. What I did is I sold the 400 call option and I sold the 325 put option. So by doing that, I'm basically saying that between March 27 and April 12, I will make money if Netflix stays between 400 and 325. As long as Netflix doesn't go above 400 and as long as it doesn't go below 325, then I make money. I make my maximum profit possible. And at that time, I think Netflix was trading at around 360. So I felt like these strike prices were safe. They had a very good chance of being successful. I mean, what are the chances that Netflix does go above 400 in less than 3 weeks or goes below 320 or 325, sorry, in less than 3 weeks? So I sold the 400 call, I sold the 325 put, and then I bought the 320 put and the 405 call for protection, just in case the stock does go above 400 and below 325. So it's really unlikely, but it is still possible. I think there was a less than 10% chance that it does that. So I had a 90% chance of being successful on this trade. So here's what I made. I made $70 while risking $430. So that's 16%. And you can see it here. If you add these up, 56 minus 40 plus 222 minus 168 is about $70, while risking the difference between the strike prices. So 405 minus 400 is 500 minus what I already collected, which was $70. So my risk is $430. The most I could lose is $430 and the most that I can make is $70. But I have a very good chance of making that $70. And indeed, come April 12, my options expired worthless because the price of Netflix was trading below my call option and above my put option. Now, some of you might say $70 is not much. It's the idea, it's the principle that, or the strategy that I made 16% in less than 3 weeks. I could have doubled or tripled the size of the trade. I could have bought 10 contracts. It would have been $700 in 2 weeks. Then, of course, if I'm making $700, then in this trade I'm risking $4,300. So because I didn't want to risk more than $430, I went with one contract. Plus, it's a strategy that I'm still trying out, so don't want to start off with big contracts. And as long as I could have several contracts of this type, it doesn't have to be all in Netflix, then the payout ratio is still the same. But diversifying just in case this in the unlikely scenario Netflix does decide to go above 400 or go below 325. So when trading options, it's all about the small gains, but it's small consistent gains with a high probability of success. If you look at how to place an Iron Condor, so basically you look up the stock under options, and then here where you see call and puts, you're going to choose Iron Condor. You're going to choose your expiry date. So let's say I want to choose May 17 expiry date. Then just click anywhere, open up the window tab. So right now Netflix is trading at 355. Let's say I think that between now and May 17, which is the expiry date that I chose, I don't think it's going to go above 400 and I don't think it's going to go below 310, for example. So first of all, I'll go choose the short strikes, which will be in this case 400. So I'm going to go select 400 here. And then for the put option, I'm going to select 310 because I don't think it's going to go below 310 come May 17. And now I have to buy protection in case it does go above 400. So I have to buy a call option. I'm going to buy something that's $5 higher. So if I sold the 400, I'm going to buy the 405. Same thing with the put option. If I sold the 310, I'm going to buy the 305. And I want to keep the same width between the strikes, so that the risk is the same whether the stock goes up or whether the stock goes down. All right, so this is what it looks like. I would sell the 400 call option, buy the 405. I would sell the 310 put option and buy the 305. The stock is trading at 355 right now. So I'll make my maximum profit if the stock come May 17 is in between 400 and 310. Here's what I could collect. I could basically collect an amount between 89 and 185. So let's say I could collect $1.25 because this is the bid, this is the ask. Now, of course, I won't be able to get the ask, but I can get a little bit higher than the bid. So let's say 125. So as you can see, it's a credit. So this is what I'm going to be collecting, $1.25 per contract. So here's what it looks like, an Iron Condor. I'm selling to open a 400 call option. I'm buying to open a 405 call option. The options that I'm buying are just for protection in case the stock does go above 400 or goes below 310. So I'm selling to open the put option at 310. So all I want from the stock is to stay between 310 and 400 come May 17, and I make my maximum profit of $125. My risk on this trade is $382. So it's actually the width of my strike, so 500 minus the 125 that I'm collecting. Questrade adds in the commission. So my max loss is $383 and my max profit is $125. But it's got a pretty high chance of success because I picked strikes that are pretty far from the current market price and only 30 days away. So this is actually a trade I could place if I want for May 17, but since the market is closed right now, the numbers might change, so I'll wait for tomorrow. I'll wait until tomorrow. But this is an example of how to place an iron condor on Questrade or with Questrade, and this is how you could if you want to see the probabilities, what are your chances of being profitable, you could click on show Greeks and you could see here delta. So it's best to look at a column called probability in the money, but if your broker doesn't have it, Questrade doesn't have it in this section here, but delta is very close to it. So when you see a delta of 13, it's safe to say that it means that this option has a 13% chance of being in the money, which means you have a 13% chance of Netflix trading above 400, which is the call option, which is the strike that I chose. So there's a 13% chance that Netflix trades above 400 come May 17. And there is a 7 or 8% chance that Netflix is trading below 310 come May 17. So as you can see, odds are on my side that the stock, it trades below 400 and above 310, because it's only 13% chance that it trades above 400 and it's only 8% chance that it trades below 310 come May 17. So that's how you could see the probabilities. If you're not happy, you can go change the strike price, pick something even further just to be safe, pick 405, and I'd have to adjust the option that I'm buying to 410. And if I go back, you could see that now I have an 11% chance of losing money and 8% chance of losing money as well on the other side if the stock goes down. Then of course my premiums change. I'm not going to make as much premiums. I'm not going to collect as much premiums. In this case, let's say I'd be able to collect $1, choosing something in between the bid and the ask. So now you can see that my max profit is $100 and my risk, my max loss is $408. But I've increased my probability of success by picking a strike price that's even further, the 405 instead of 400. So I just wanted to share with you how I was able to make 16% in 2 weeks and a half with this Netflix trade, and how to place an iron condor with Questrade. So if you have any questions, leave them in the comment section below. I'm starting a WhatsApp group for $10 a month where I'll be sending my trades live as I place them during the day. If you're interested, check out the links below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also, it is tax season. If you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below. Thanks for watching.